Hello nieces, hello nephews, it's your Uncle Charles here, and welcome back to my YouTube channel where we do unbiased price action analysis. Hey everybody, so glad to see you all. Hope you guys had a great weekend. It was a nice 3-day weekend, much needed. One thing I like to do on this channel is cover stocks that are volatile. And boy, I've been looking at coin lately. We had a trade idea on my Discord last week on coin. I mean, this stock moves. And it's just a beautiful thing. So I'm definitely going to cover it later in the video for anyone interested. All right. But we're going to talk about the SPY. This is a weekly chart, guys. Let me see here real quick. Type up seasonality. So this is the updated seasonality. Guys, I tell you guys a lot. Like, I don't do predictions on this channel. But if I am going to look for some predictability in the market, I'm going to use some data. And the 20-year average is good data. That's a large sample of data based on the price action, but the average movement of the price action, for the last 20 years. And this is what we got. You guys can see here. And this does include 2023's price action as well. And according to this, there is a tendency where SPY gives us a higher low in early January, which leads to a higher high close or around mid-January, followed by a bearish rest of January, heading into February. Of course, we follow the price action. And for this, we track this to try to give the market some predictability. Like, what does the market usually do around this time? But the price action is what we use to enter and exit trades. Does that make sense? So a potential top is possibly could be in this week. That's the tendency, at least. And we're looking at this weekly chart here. And it looked like January 2nd, the first week of January, could be the higher low, with last week giving us that move to the upside. For follow-through, bullish follow-through, we could get some pullbacks and back tests of levels we broke out, like the I have multiple levels. 473 level. I definitely don't want to see it test 471.3 again. If you're a bull, we tested that level multiple times and even recaptured it. False breakdown, setup base on the weekly chart with that level. So if you're a bull, you don't want to see that level get tested or lost again. What you do want to see is, if you're a bull, look how almost perfectly 478.6 level. That's my 1.382 fib level. I gave you guys that level, and we had a rejection from there last week. Now, if you're a bull, that's the level you want to see break next. The bulls have been taking the stairways up. That's the next step to take. If you're a bull, that's the next trigger to go long. If you're already holding calls, then that's your sign or signal to keep holding your calls or keep holding your long position. Is if we clear 478.6. And if that happens, all time high is in play around 480. It's at 479.98, but 480, we'll round it to 480. And above 480, I have no resistant levels until 48.5. I usually find my support resistant level not only with fib levels, but I try to identify buy in the supply and demand zones, excuse me. And with all-time high, there's no supply or demand zones above. However, I do have a Fibonacci extension level at 484.5, so that's a level of interest to me. And the upside will be, and only possible, is if 478.6 clear, and that would trigger more upside. Okay? To be bearish, the bears have a lot of work to do. We've literally been on an uptrend since October 2022. We've definitely been on an uptrend since October 2023. Okay? You guys can see that. Is it possible we're entering the chop phase? Possible. Lord, I hope it's not the case. But we got to watch the level. Now, as far as the bear case scenario goes, we got to break down levels. Last week we closed at 476.68, few cents just above my 476.5 level. If that level clears, 475, if that level breaks down, 475, 473, and 471.3 would be back in play. Now you guys see that this was a fib extension level, that 471.3 level, so it's important. We had a false breakdown setup off that level. If that level fails this coming week, that is bearish. That's a big bearish sign, putting 469 in play. And below 469 would be very bearish as well, putting 467.5, 466, 464.5 or lower in play. Okay? Trading is not easy, but it does not have to be complicated. Let's simplify the process, stick and trade with our edge. Above 476.5, breakout, last week's breakout stays intact, and bullish follow through would be to clear 478.6. That would trigger more upside. Okay? We don't call tops on this channel, but what we do is call out false breakouts and false breakdown setups, the traps. Okay, we're going to call the market makers out on their bullshit that they do to us. They try to trap us. So call them out on it. Make it a habit. Make it a trend. Make it a trend. All right? So if we're going to call a top, wait for the right situation. Wait for the right condition. False breakout setup or a gap or exhaustion gap. That's the things we need. Okay? So like I said, 476.5, that's a bearish warning sign. 475, 473, more bearish warning sign. But a below 471.3 would definitely be bearish and cancel this false breakdown setup. Who was the last to get trapped based on this chart? It was the bears who were the last to get trapped based on this chart. So because they were the last to get trapped, we want to trade bullishly. However, if the trap setup, which was the recapture of 471.3 and 469, if those levels fail, guess what? That trap is not intact. It's canceled. It's invalidated. And the bulls will be the one to get trapped. And if they're the ones to get trapped, we trade bearishly. We trade with the traps. That's the key to trading. Trade with the traps. Why? Because this is a manipulated market. We got people pulling strings. Look up about Wickoff and it explains it in there. Okay? It explains about those manipulations. All right? If you study that. So because we know that there is manipulation, decades and decades of history and evidence, we want to trade with the traps. We want to use that to our advantage. To be a sheep trader is to be a trap trader. It's to trade with the traps. That's what it means to follow the price action, the real price action, to trade with the traps. Not against the market makers, but with them. Even though we don't like them, there's an old saying, you keep your friends close and you keep your enemies closer. So when Uncle Charles is watching this chart, I am watching my enemies. You're darn right. I take this serious. I'm watching my enemies. You keep your friends close, but your enemies closer. Why you want to keep your enemies closer? So you can watch them. Watch their tendencies. Watch their behaviors. Watch their pattern. You got to have a certain mindset to be a trader. And I want to give you guys that. All right. So that's the plan for SPY. Triple Q. We'll look at a daily chart for Triple Q here. Let me see. Potential double top around that 411.2-ish zone. All right, 2 times we had some selling pressure there. So if you're a bull, that's the level you want to see clear. 411.2 to put 413 and playing above 413. Guess what? New all-time highs. And I don't have no fib level until the 416 to the 417 zone. All right. Now, if you want to be bearish, you got to get the breakdown. Got to get the false breakout setup. 409, 407.5, and 406 are levels to watch. If those levels fail, especially 409, look to short with 404, 402, and possibly down to 399.5-ish would be in play for Triple Q. All right? Bullish above 411.2, bearish below 409. IWM, it closed right at that critical fib extension level. Fib extension. It's a regular Fibonacci level, actually. 193.3. Last week we closed at 193.23. So a few cents below it. I guess that's technically a breakdown. But we'll see what happens tomorrow. Below 193.3, I would be bear bias. Okay. And the next breakdown that bears definitely want to see is 190.8. This level is a 78.6 fib level, and it's also based on this blue uptrend line. A breakdown of 190.8 would be bearish and put IWM in breakdown mode, okay? And maybe we go back and test the 50 daily moving average or something like that, okay? Now, if we test that level, obviously, bulls better step up, bounce, and I'll only trust the bounce if 193.3 recaptures. So overall, I'm only bullish above 193.3 and 195. Those levels clear. 197 would be in play. Potential double top around that 197 zone. So we'll need to clear to cancel that to put 198.75 or higher in play. All right. Here is Tesla. Since breaking down that rising wedge, Tesla has given us a beautiful move to the downside. How much more are we going down? Because I got a bunch of lines here that a lot of my viewers hate when I do this. Let me take them out for you guys, okay? Please don't kill me in the comment section. All right, this very, very important pivot level here that I need you guys to pay attention to. Friday's candle, we closed at 218.89. Now, like I've been saying, I have fib levels starting from July 19th, pivot high, down to Halloween 2023, Halloween, October, pivot low. The 23.6 fib levels at 219.2, guys. We got the breakdown of that level. Let me check the Bollinger Band. Okay, it's overextended to the downside. But price action is the shepherd. So with that in mind, because we got that close below 219.24 is the exact number, bulls need to recapture that level. Okay? If bulls can recapture that level, maybe we can get some type of retracement. Whether it's a reversal or a dead cat bounce, it should be sizable enough that we can trade it. But 219.2, 221, 223, and 224.5 are levels that I need to see recapture to put 226 in gap fill. Gap fill is at 227.2-ish. And then I got 229 and 231 above that, okay? Overall, if we are below 219.24, guys, we are bearish. I know the RSI says oversold, but it can get more oversold. I know the Bollinger Band's overextended to the downside, but it can get more overextended. So 219.2, if it stays resistant, we stay bearish. Next support is at 217. 217 fail, we could get more downside down to 215. 213.5 and a previous pivot low back in November at 212-ish. Okay, guys, that's the plan for Tesla. Here's NVDA. We got a one directional move to the upside all January so far. Got the first pullback on Friday with a lower close to the one on Thursday, okay? Could get into the chop phase right now, so we got to be careful, okay? Overall, the critical resistance level is at 549. That is the 1.786 fib level. So if 549 clears, we're heading back up. Okay, 549 clears, very possible we head up to 552 and 553.5. And above 553.5, I have no fib level until 560.86. Imagine that. All right. Support is at 546, 543, and 539.7. Those are the critical support levels to watch. If those levels break down, guys, we could get a deeper sell-off down to 535-ish. And below 535-ish, I would be bear bias with 533, 528.8, and 526s in play. All right? Apple is consolidating. What I need, it has an inside candle. What I need to see is 187 clears. If 187 clears, that's the mother candle's high. That will put the 50 daily moving average in play, which is around 189-ish. And then 191.2 fib level in play, okay? Critical support would be at, I have support at 185.7, but the critical one is at 183.5. If 183.5 fail, bearish, we'd likely drop it down to 181-ish. That's around where the 200 daily moving average is. And below 181, I'll definitely be bearish. There's no bull market that is below the 200 daily moving average, guys. Okay? Microsoft, it has inside candle looking like there's still some buying pressure, just higher closes for the last week. If 388.68 clears, that's the fib level. If that clears, 390.5 is in play, and above 390.5, new all-time highs, and I don't have no fib level until 395.44. All right, for me to be bearish, as always, support must fail. So I have support at 386 and 384.6. Those levels fail, bearish with 382, 380.3 in play, and then my white trend line support is at 378. Below 378, bears take control. All right, guys. AMD, is this a double top or cup and handle? We did lose that 148 level. That was a fib extension level, and it did give us some decent downside this past week. But bears need to show some follow through because we got an inside daily candle here. First thing they need to do is stay below 148. Next thing they need to do is take out the mother candle's low. Mother candle's low is at 143.69. If that level's fail, guess what? 142, 140 or lower is in play, and I would be bearish. Now, if this is a cup and handle, 148 must recapture. Give us that false breakdown setup, triggering longs to put 151 and 152.68 in play. Above 151, double top is no longer in play. All right. Google, inside candle as well. Friday was just a consolidation day pretty much. But mother candle's range is 142.22 to 146.66. So we got to watch for the break of that range. Add those levels to your charts. Watch the break of that range. Above 146.6, I would be bullish. And below 142.2, I would be bearish. Okay? Netflix also has an inside candle setup. If you're a bear, the next level you want to see breakdown is 491.4. 491.4 fail. That is bearish. Look to short. Lower targets would be in play. Now, the next critical support level below 491.4 would be at 483.8. That's the mother candle's low. Below 483.8, bear bias, we are likely dropping a lot lower. All right. Now, for there to be a bounce, levels must recapture. False breakdown setup. So 494, 495.5, and 497. Those levels must clear for some potential upside. Then next, 500 and 501.2 must clear to put the mother candle's high in play, which is at 503.41. Above 503.41, that is when I would be bull bias. Okay? Meta, I have support at 373. Stay bullish on Meta as long as above 373. Next big target is at 378. That's a fib level. And above that would be 380 and 384ish. Okay? If you want to get bearish, watch for a breakdown of 373 to put 370, 367, and 363-ish in play. Below 367, I would be bear bias. Amazon, I keep forgetting to cover Amazon. I'm so sorry to my viewers who watched this part of the video, but I got you. Inside candle setup on Amazon as well. Mother candle's range is 153 to 157. Anything between this range, guys, is chop. So just keep that in mind if you're trading. But if we can break this range, above 157 is when I would be bull bias and favor more upside. And below 153 is when I would be bear bias and favor more downside, okay? The equilibrium level within this range is 155.6, okay? So 155.6 clear. That will put 157 in play, and above 157, bull bias. All right? 153 fails, look to short. All right? And here is coin. Last week we had a strong rejection. This is Thursday. We had a strong rejection from my 23.6 fib level. That was around 159.6 to the 160 zone. It was so strong that it broke the next fib level, which was at 142.4. And then the next day on Friday, last Friday, it showed follow through. For it to continue to show follow through, I like to see resistant levels hold. Like we had a buy zone, but now it's a sell zone at 136. And we had another level here at 134 that served as both resistant and support. So as long as it's below 134 and 136, I'd like to see a breakdown of the next support at 130 and 128.5. Now 128.5 is the 50% fib level. So a breakdown of 128.5 would signal to me at least that this sell-off continues and the bottom is not yet in, and we could likely head down a lot lower, okay? Now, if we're going to favor some type of bottom or even a dead cat bounce that's probably tradable, resistance must clear, okay? 132, 134, 136 must all recapture to put 137.5, 139 and 141 back in play, and above that the fib level is at 142.4. I would switch back to bull bias, or I'll feel more comfortable switching back to bull bias if 142.4 recaptured. All right, guys, so use those levels wisely, unbiasedly, like a sheep. Bah! Let's get to the dark pool, guys. Dark pool. Oh, we got nothing. Goodness, let me check last week's activity. Search. So last week, the most activity we had was at 474.67. Where is it? 474.67. 3.5 billion. So the big money players are taking interest around that zone. And then the second most level we had, it was a 476.3. And then, yeah, around 473.9-ish. All right, so add those levels to your charts, guys. Rewind this video if you need to. All right, option flow for SPY first. Filter for 500K premiums or above. Let's see what we got here. It's still bullish. Higher volume for puts, but bigger money for calls. What you guys going for? Quantity or quality? Shadowflow says bullish, so they go for quality apparently. Triple Q is bullish. IWM is bearish. Let's see. Tesla bearish. NVDA is bullish. Apple is bullish. Microsoft is bullish. AMD is bullish. GOOG is bullish, but a little higher volume with puts. Let me see the one with the L. That's also bullish, same situation. Netflix, 100% all in calls is bullish. Meta, bullish. Amazon is bearish. And Coin. Got anything for Coin? Coin is bearish. 96% bearish. Very dominant with the bearishness. All right, guys. So thank you guys so much for watching. I hope you found value in this video. If you want more content from Uncle Charters, please consider joining my Discord. I'm expecting a volatile year, and volatility makes cheap style trading like heaven. I'm telling you. Anyways, have a great evening. Great rest of your day. Peace.